Shares of Paytm had a roller coaster ride on Wednesday, starting 5% higher but ending the day deep in the red. Now, the wild swing in the stock came after Paytm announced that it was selling its entertainment ticketing business, including movies, sports, and events, to Zomato for a hefty fee of 2,048 crore rupees. Remember, Paytm has been struggling lately, so it's decided to refocus on its core strength, which is financial services. And let's not forget that earlier this year, the Reserve Bank of India slapped a ban on Paytm Payments Bank, one of its biggest moneymakers and a key part of its plan to profitability. That news sent the stock plunging nearly 60%. However, since May, Paytm has made a comeback, rallying almost 80%. So what's driving this price surge and who really comes out on top in the Paytm-Zomato deal? To help us break it down, we have with us Amardev Singh, Senior Vice President of Research at Angel One, and Avinash Gorakshakar, Director of Research at Profitmart Securities. Amar, I'll come to you first. Paytm shares now crossed rupees 600 mark today, but then reversed course and fell as much as 5%. It's still up over 80% since making that low of 310 rupees. What's driving the stock?
So I would say that Paytm is definitely benefiting by the overall investor sentiments that have changed for the new age companies. Because what we are seeing is that many of the companies, including the likes of Zomato and others, have been now trying to get into the profitability mode. Somewhere or the other, they are understanding that VC funding or a lot of spending money is not going to get them very far. So somewhere or the other, they'll have to come on the profitability path and they'll have to focus on their key business areas and rather stay defocused. So I think that's what investors have also understood, and that's the reason why some of these new age companies, we've seen the investors also rewarding them and investor interest increasing significantly in some of these companies.
Avinash, let me take the same question to you. What do you think is driving this rally in Paytm stock?
I think my guess is that there have been some market reports that possibly Paytm as a business could possibly be taken over by some large business entity. Because if you look at the fundamentals, we still have a operating loss kind of business. Cash flows are not coming in, and there are a lot of regulatory issues which are still lying in a kind of a overhang kind of state for Paytm. The recent deal with Zomato also clearly indicates that Paytm is really looking at generating cash from its non-core assets. And most importantly, recent reports have also indicated that they've announced a pay cut for some of the senior employees. So, obviously some cost cutting measures are also being implemented. So I think, if you look at all these things into perspective, I think the stock initially went up considering the fact that the Zomato deal was worth about 2,084 crores. But I think if you look at the bigger problem, I think the markets are not going to be excited by this one-time event, because obviously, unless the cash flow start, unless the regulatory overhang goes away, I would not be surprised that you're not going to see any positive numbers happening for Paytm, at least for the next, say, 2 to 3 quarters. So I think, that was the reason you saw some selling at the end of the session. Initially, the stock went up on the positive news flow of cash getting generated. But I think this was just a momentum upside. It was not a secular kind of upside, and therefore I think the markets obviously realize that this is not a recurring event. It's going to be just a one-off event. So I think that's the reason you saw selling pressure. And I think in this entire deal, my sense is that Zomato would be a bigger beneficiary.
Amar, Paytm said that it's selling its entertainment ticketing business, which by the way was a high margin business, to focus on its core operations. What exactly are its core operations? I mean, Payments Bank, which was expected to drive the company towards profitability, is done for. In the UPI space, they are losing ground, and I don't think it's a high margin business anyway. So how exactly is Paytm going to make money from here on?
So see, Paytm, we have to understand is that Paytm is no doubt India's, you can say, leading digital player with a significant millions of customer base and merchants that it has built over the long span of time. So you can say the largest payment platform, and also I would say the RBI regulations orders which had come. So that impacted their growth, and that is from where you could say a stall in growth happened, and also there were some concerns which were raised. So the company is focused on addressing them, and the company understands that it's see, what happens is that you've got your core business and you've got your satellite business. So in terms of the core business, Paytm is always known for the payment systems and the financial services. They were looking at banking as well. So that's where they got I would say, a hit. But overall, see, if you look at India going forward the next 5 to 10 years, we've become a very big digital economy, and there is a lot of space for players such as Paytm, provided the company or such companies, they are able to showcase a roadmap for growth and as well as profitability. Because if you look at Paytm had its, I would say, worst quarter. And despite that, the company has, or the shares have rebounded. And as you rightly said, from the lows, the stock was up by almost 100%. So markets and investors, savvy investors, are generally forward-looking. They definitely keep a track as to what is happening right now or where the company is. But they also have a horizon of at least 2 to 5 years, I would say, anywhere between 2 to 3 years, depending upon the investors' risk appetite and also the investors' patience. So if you look at Paytm has been loss-making till date, and the loss has magnified or increased for the June quarter. But overall expectations are that it is now trying to set in place or set in order and focus more on the financial part and the payment systems, where its I would say edge lies. And also selling off from these, I would say, because non-core assets in terms of ticketing, so where the company would realize close to 2,000 crores plus of funds. So these are some positive steps which the company is taking, which is being perceived by the investors. See, the perception is very important. So that is being perceived by the investors, and Paytm has been a stock which, if you see from the days of listing, has been a wealth destroyer. But now they are trying to see how things can really work out their way on the lines of Zomato, on the lines of other companies. So it's, I would say, fingers crossed, because it's still a long way to go. But yes, investors seem to be liking such companies now more, as because it's more of a credibility at stake as to how you would get into profitability. It's not that you have to get into profitability in the next quarter or 2 quarters, but what is the roadmap, what is the path, and what is the probability of the roadmap being eventually executed. So these are certain questions which investors also keep a close tab on, and that's what is helping some of these new age digital companies.
Okay, to follow up on that, do you think the worst is behind for Paytm, and it's the brand and the network that investors are banking on, and also a conducive investor environment if you look at the new age companies?
See, as far as Paytm is concerned, yeah, it seems that the worst is over, until unless there's something new comes up which the markets have not factored in, or something of that sort. But that's always a case, because you never know what sort of regulations might come in. But that's a challenge which investors have to actually take it on their chin as it comes, and companies and corporate alike. But yes, it seems that it shouldn't retest its lows of 300 almost, which it had witnessed, until unless we see a major sell-off happening in the overall markets, and that could be one of that. Otherwise, but we'll have to watch out how on quarter how the company is faring, and also apart from that, what the management is saying, and is it getting executed on the ground, and is it really matching with what they're saying. Those things play a very important role, apart from the financials of the company, because investors keep a close tab on as to what the management is talking about, and whether they are delivering or on their promises. So because now investors have also become smart, they look at management very closely, whether they are over promising and what's the delivery. So those things play a very important role as far as the savvy investors are concerned.
Avinash, Paytm closed at around 550 rupees. Is it a good price to make fresh entries, or perhaps one should wait and watch?
Yeah, I think unless you have a very high risk appetite, and I think you want to play possibly the takeover kind of game. I wouldn't like to mention any names, Suresh, but clearly, there are many business groups who are interested in taking over the entire company. And that I think could be a big trigger point, because once the management changes, once a larger business group takes over, I think the cash flow problems obviously disappear. And I think as of now, the current management team is battling with a lot of issues. Apart from the cash flow issues, I think it's a question of credibility. Talking to the regulator, getting up to their proper kind of image. So I think somebody who's got maybe a higher risk appetite could start nimbling at these levels, because the IPO price was almost 2100. You're getting it at around 550 odd, so it's a heavily discounted price. But one should keep into mind that this is a event driven call, so it could happen in 6 months, it could happen in 1 year, it could happen even sooner. But then this is something which is unpredictable. So I think for high risk investors, yes, 500 550 may not look bad, considering that it's a well established business model and is going through a kind of a mini crisis. So unless this event happens, I don't think you're going to see a big upside. But yes, a contra call can be taken for investors who are willing to take that kind of risk in their portfolios.
Avinash, the Payments Bank is also getting a new app. And is this being done to delink the two companies, Paytm and Payments Bank, to create a wall, something which RBI had also flagged earlier in its January ban?
I think this is a very speculative question, and it's difficult to answer your question. But I think yes, see, efforts are going on, and I think unless the regulator now comes to the table, there is a kind of relaxation and there is some solution which is found out. Because Suyash, since this event happened with RBI, until now the market is still clueless as to whether a solution is going to come in or come out. So unless that solution comes out, I think these are all possibilities. So I would say that it's very difficult to correctly assess that whether this is an indication of that event happening. But I think hopefully I think the regulator will come to some conclusive kind of decision in the interest of all the investors.